Hi, everyone, and welcome to AB Conversations, where we will help you CFP your way out of it. A podcast where you get into the minds of a couple certified financial planners on how we think and feel about everyday financial planning questions and what should really matter most to you. A healthier financial life starts now.
So today we're going to talk about when maybe an investment sounds too good to be true or too good to ignore, and where we kind of see that play out in our world, or where we see either clients already own something or are being pitched, kind of a private investment, an alternative investment to the world of, our typical stocks and bonds and, cash, CDs, like instruments, these private investments. There's ways to kind of get into them, and they can run the gamut from this is truly fraud, and worst case scenario, you lose your money, to these are legitimate investments. They can have a role in somebody's portfolio, but they come with a whole host of different issues, or just different things to be aware of. They're certainly not a fit for everybody.
Yeah, I think it's going to be really important for us to touch on that there are certainly legitimate private placements. As investors, you sometimes are looking for something different, something that's not correlated to the stock market or the bond market. We hear this a lot. People do get introduced to certain investments like this, and maybe we should just start with why people are drawn to that. And let me just piggyback on what I was just saying. Sometimes it is just because it's different, right? It's maybe going to perform differently in a certain market, or I'll hit on a lot of these kind of, I don't want to say promise, but they're pitched as something that's going to pay you more, give you an income, give you a yield. You're going to participate in something different.
Yeah. And so where we see that often kind of manifest itself is these private type investments are often tied to like some sort of other business or some sort of like tangible thing, right? Think real estate. Real estate is one of like the originals, where you're pooling your assets with a whole bunch of other investors, and there's a company out there that's now going to take all of these dollars that have been pooled together, and we're going to go buy the real estate that you
golf courses,
yes,
amusement parks.
Yes. And I think that's how a lot of these private type investments are illustrated, or they're kind of meant to operate in a way that is, if you wanted to go do this on your own, not only would it take a heck of a lot of capital, but it would require a heck of a lot of research and due diligence and all of that. But hey, you just give us a portion of your money, we'll do all of the heavy lifting, and we'll give you a portion of the returns for that. But in those areas that, again, our brain can say, I understand there's a building, somebody's paying rent, like I just get a piece of that, versus I know I own stocks, I know I own bonds, I know that they go up over time, but how does that really work? Kind of the behind the scenes, it feels more tangible.
Well, and I'm glad you said there's a psychological side to it too, because I think sometimes when we hear these things from clients, it almost comes across like they feel like they're invited into something that feels exclusive. Like, I know somebody that's in this, and my friend's making 12% yield, and not everyone gets access to this. So I now feel connected, special, sophisticated. I mean, you insert the words here, and that is sometimes why we're just drawn to the opportunity.
Yeah, and we've certainly heard from clients too that they just, and you said it earlier, right? Things that are not correlated to maybe some of my other investments, meaning they're not going to act the same in the same market environment. So when stocks and bonds are zigging, maybe I have this other investment that is zagging. And we've heard from clients that is, well, I have a lot of my money tied up in the stock market or the bond market. So maybe I just want access to something different, just to have another layer of diversification, which again can absolutely be an okay way of going about it. But we would just want to make sure that there are enough other liquid investments, or their situation can survive maybe a portion of it not being liquid or not accessible for a period of time.
Right, because this is maybe where we can pivot, Adam, into some like real stories, things that we know happen to people that we're close with. And because of the way that these are structured, and I won't go too deep into like the legal side of it, sometimes the transparency isn't there, and sometimes that's where fraud can happen, right? I'm remembering very early in my career, a couple very close to where our office sits, they were paying a mortgage to an institution that they thought was legitimate, That was not. It was mortgage fraud, right? They were literally thinking that this company was a bank and they weren't really operating as a bank. And think about years of payments that really actually went nowhere. Sure, there was some
Yeah.
restitution, but that's just a horrible reality because they thought they were getting a different deal or, something better
Yeah.
than what they could have gotten at a traditional bank that's certainly regulated.
Yeah, and that's as I said earlier, all those are like in the worst case camp of I'm either investing money or in your example there, like I'm paying my mortgage. I am going through this process. I believe it's going in the right space. Turns out, yeah, it is just true outright fraud. These dollars are gone. There's a legal process to now go through, and that is just, yeah, a nightmare. To the other end of we've had a client very recently that had a couple of non-publicly traded investments that are held in a brokerage account at another, big investment institution. So these are legitimate investments, but it's the illiquid nature, meaning it's not like a mutual fund or an ETF or a stock that you can go and say, you know what, I want to get out of this. I click the button and I'll have cash in my account, in a matter of days. There are often big restrictions on access. We've
Yeah.
certainly seen it. Different products are all different, but you may be only to submit for a redemption quarterly or semi-annually, or there's an annual window to just get a portion of your dollars back. But again, it can kind of run the gamut of, so the one that we're looking at now, even when they are legitimate investments, it is still that transparency issue, right? You're not really sure
Right.
what you own, when you can get access to it, when will it go public, and now I can turn it into real dollars and actually feel like it was worthwhile.
And what is it
Also,
worth?
so that's the key point. Over time, again, I'll say again, mutual funds and ETFs, they are required. They are heavily regulated in that there needs to be regular reporting, not only on what the fund owns, but the valuation. So like you just said, what is it worth? Those things revalue every night. These types of non-liquid or non-transparent investments, they're not held to that same standard. They can basically value themselves and they're kind of doing their own valuation over different time periods. So again, you lose some of that transparency on what is this investment worth at any given point in time. So all of this to say, I'll stop talking, I promise, that even when there are these legitimate investments, you may put $10,000 in, up front, and over time, and this specific example for this client that is in my head, we're now at the point where that investment fully went through the process. It is publicly listed. It is now a stock that can be sold. But here's the bad news. Over that course of a decade or so, for this to get to a liquid point, that valuation has fallen over time. And then when it goes public, you have a whole bunch of investors, probably like ourselves, who would say, oh, I can finally get some value back out of that. I'm going to sell
Yeah.
and repurpose these dollars. So you get kind of this run for the exit, and that selling begets more selling, the price goes down, and here you are with a legitimate investment over a period of time. And not only hopefully you've made some money, but in our anecdotal experience, oftentimes the dollars you end up with are significantly less than what you started with. And by the way, you've now lost out on some opportunity over whatever that time period it is for those dollars to have been invested elsewhere and actually grow. So it's kind of a double compounding effect, even when they are legitimate investment vehicles.
Right, and I guess that's the point. When you are stuck in a spot where you can't liquidate, not only is that sometimes not great for as advisors to clients who need flexibility, but that lack of transparency on value is one thing. The other is I'm going to go back to the really negative side where fraud just exists, where this
Yeah.
is pooled money and funds are sometimes used to pay earlier investors when the returns aren't there, or this is again, we all know the stories. This is how Ponzi schemes exist,
Yeah.
right? Gentleman in Lancaster right now going to court because it was ATM machines, it's storage
Yeah.
facilities, it could be anything, right? Big
Yeah.
equipment. We've seen them all.
Hmm.
But if money wasn't being handled the right way and it's not reported the right way, this is where investors they don't even know what's going on behind the scenes to be able to get themselves out of something that doesn't that isn't going to go well, because
Yeah.
fraud's involved. So it's not to pick on people that end up in that situation either. Let's be very clear. To your
Hmm.
point, there are legitimate ways to go about this. The victims of these things are, it's not that they're not intelligent, successful, right-minded people. It's
Yeah.
not about that. Sometimes it's just, we trust that things are going to go well. And without understanding the mechanisms behind the scenes and the regulations and the reporting and the oversight, we kind of enter something that had we known all those things, we probably wouldn't have.
Yeah, and you think back to, or at least, I think this way sometimes, where you think of these areas of investment fraud, and the one that always comes to mind is the whole Bernie Madoff situation, right?
Oh,
But
right.
and you think, yeah, and these are massive, massive schemes, but you think that they are centered around kind of financial hubs, right? New York City, Los Angeles,
Yeah.
Miami, like these
Right.
big centers of influence, right? Financially, and you think, well, but I'm in Berks County, Pennsylvania. And I'm not that far from Lancaster. I can buy this access to this investment. What are the odds that this is going to happen, kind of in my backyard? But the more and more that we've been around and we've seen, it is just it kind of blows my mind that these things are happening not only just in our area, but to the degree in which they are happening. These are not
Right.
small, amounts of fraud. Again, we're not saying that is happening in all of these circumstances, but I think just to drive home the point for me is, yeah, we're not immune to this in our little neck of the woods here, even just being in Pennsylvania.
Yeah, so I realize a lot of this is probably coming across like we have a strong bias against these alternative investments. So
Sure.
let's present the
Yeah.
other side of the coin. You said it well. There is a segment of our client base that this would be okay for, right? In
Sure.
the spirit of diversification, but that usually means you do have more in assets and that you're looking to take a smaller segment of your pie and use this as more of a diversification or a satellite. Like, right, when we
Yeah.
think alternative investments, you're better at this stuff than me, Adam. You can fill in the blank. That's 5%, 10% of your
Ye-
holdings. We're not
Yeah.
taking half your life savings and banking it in something that either is becoming or illiquid, or again, just we may not be as comfortable with long term.
Yeah. I think there would have to be either a strong desire on the client's end, or we would have to have a really good reason as to why we would desire that higher level of diversification. But you're right. This would not be an all or nothing decision. This would not be, hey, let's put half of your investable assets into this
Right.
thing. It is a satellite, as you said. We would want to isolate it in that way, and in the same way that we would treat even just individual stocks for any of our clients, that we don't like that idea of having a high amount of concentration risk, right? Putting too many of your eggs in one basket, and this would certainly fall into that camp. And the thought process there, again, just being why we would say it could fit in that situation is that if the worst were to come to pass, we're kind of isolating this and putting it in its box that if this 5% portion went to zero and it disappeared tomorrow, it is not completely derailing
Right. Yes.
somebody's financial life, right? They are not relying on that portion for income to sustain their lifestyle in retirement, right? These are ways to maybe either increase the return potential, decrease the correlation, right? How your investments work together. Maybe you're trying to decrease your risk to some degree. But yeah, I think you wouldn't want to invest in something like this if it really was tied to your retirement success, right? Either tied to your income, or if you may needed access to dollars later, you
Yeah,
wouldn't
right.
want that tied up in a spot that you just couldn't get access to.
Yeah, and again, maybe we're speaking to the audience that listens to us the most, where, we're not gonna be the ones kind of presenting these very different ideas, and
Hmm.
that's just because for most people that we come across, liquidity, transparency, the ability to understand what you own and what it's worth, like that usually is more than enough to feel confident and comfortable with the way you're going about structuring your retirement portfolio and your retirement income. So, if you're in the camp of doing something a little bit different, in this case, alternative investments, that's fine. But again, I think you hit on the main point that I wanted to. It can't be people that don't have an emergency reserve, or they'd be
Right.
borrowing money to do it, or somebody that, wouldn't really understand what they're getting into.
Yeah, and even still, I think we would want to just look at it through the lens of what what are we truly accomplishing by adding something like that? Does it truly feel worth it, again, for that specific situation?
Yeah. I really appreciate you bringing this topic to us because It is something we've seen a couple times now, good, bad, and sometimes very ugly. So it's good to just put the education out there. There's a space for it, but we got to be very careful about understanding what it is and how it's going to be regulated and whether it's liquid or not.
Yeah, and I think just maybe to put a bow on all of it, I think just as we are seeing and as clients are kind of hearing the headlines on just the market consolidating, right, to these smaller and smaller handful of companies kind of driving the overall returns, it's very enticing to say, but I own all of these things. I want to go do something different, give myself a different experience. It is that allure, right? The fear of missing out, that there's something else out there that could be doing better for me than just what everybody else is doing. And we would just caution anybody that is, do your due diligence. Let's just make sure that it fits
Right.
and that it checks all the boxes that, yeah, if things go sideways, it's not going to completely derail your financial life.
Can I give you one last softball before we sign off?
Sure.
You can invest in alternative investments that are liquid.
Yes. Yeah. Yes. There are liquid alts and non-liquid alts. And yeah, I guess to your point, that's kind of what we've been focused on this is the non-liquid side. But yes, there are liquid alternatives. There are mutual funds and ETFs that can give you access to some alternative investments. Yes, that's like dipping your toe in the water rather than, jumping in with 2 feet into a private investment,
Yep.
In your local area that, again, you're not quite sure you have as much transparency on.
Appreciate your insight as always.
All right. Thank you.
Till next time.
Bye.
Hey everyone, Adam and I really appreciate you tuning in. Please note that the opinions we voiced in the show are for general information only and are not intended to provide specific recommendations for any individual. To determine which strategies or investments may be most appropriate for you, consult with your attorney, your accountant, and financial advisor or tax advisor prior to making any decisions or investing. Thanks for listening.